With us today again is Tom Chumansky. He's the Finance and Accounting Solutions person out of the Jackson Raymond office. And Tom has nearly 20 years of experience as a Chief Financial Officer. And prior to joining Raymond in 2017, Tom was a founding partner and CFO for a business consulting firm that primarily served small and middle market companies. He also worked for 10 years as the CFO for a $110 million multi-site tier 1 automotive supplier. Tom has significant experience in financial executive leadership, business financing, debt restructuring, facilitating rapid turnaround to profitability, and assisting organizations through ownership transfer and leading company acquisition teams. He has held various interim executive roles where select accomplishments include leading a company through ownership transfer, introducing a significant new customer, and assisting a new president transition into their role. And he's recently just picked up outdoor running. So a warm welcome to Tom, and I'll let you go ahead and take it away, Tom. Thanks for being here today.
All right. Thanks, Brenda, and good morning, everyone. Today we're going to talk a little bit about where we're at with the PPP programs, the EIDL programs, and in an ever-changing environment. I know I was just updating some slides over the weekend to try to get some of the latest information in. So I think some of the objectives there today is just really to make sure everyone understands what some of the recent legislation in December and here recently have meant to some of these programs, how they can fit in for your business, and just some things to keep an eye out for as you're navigating some of these programs. So I'm going to share my screen, and we're going to walk through this. So just one second. All right, everyone should see my screen. Let me just. The act that was passed at the end of the year, rolled out PPP 2 and put through a number of changes related to PPP 1 and 2, EIDL, and some tax-related type updates that came out at the end of the year. That's me. So let's start with PPP 2. So, Congress freed up $284 billion for first or second time borrowers. That's going to run through the end of this month. So I think it is something that, if you haven't got through this process, either PPP 1 or 2, we're now, down to the stretch run here unless they extend it, here over the next 2.5 weeks until the end of the month to get an application in. So, some of the changes that we saw at the end of the year that are rolled out now through the program is, they expanded some areas. For example, the 501 C6 organizations are now eligible, so there's a lot of, member and nonprofit organizations that now can go and put a application in for the first time under a PPP 1 application. There are two different applications, PPP 1 and PPP 2. The PPP 2 are capped at $2 million, for a second loan. The first PPP 1 is still capped at $10 million, so that is still the same amount. Just a couple other things to keep in mind: that if you're a corporate group, PPP 2 is capped at $4 million across your group. So, if you got $10 million the first time across the group, you're really capped at $4 million across those multiple entities. So you'll kind of have to pick and choose on which entities you use to get to the $4 million corporate group cap. And obviously, the big thing with the PPP 2 is the restrictions, really narrowing down who's eligible for this second round. They've gone down to 300 employees from the original requirement of 500. Another important thing to note there is they also eliminated any alternate sizing standards. So in the first round, you could go to the SBA site, type in your NICS code, and there were certain industries that, their definition of small business wasn't 500. it was 800 or it was 1,000. There was also some revenue and profitability and some net worth tests that you could also do as an alternate way to qualify if you were above that 500. All of those alternates have been eliminated for PPP2, so you really have to be under that 300. And again, that's on an affiliated basis. Again, the SBA has very broad definitions, for affiliate. It's over 50% ownership. It is same management control. Could also be less than 50% if you're the majority shareholder. So let's say you have 35% and there's 10 other shareholders or 20 other shareholders that make up the rest. You could be deemed as having control in the SBA eyes. So again, if you've got multiple companies, you need to add those up, your employee counts, and be under 300. And you also have to have a 25% quarterly revenue reduction in a quarter from 2019 to 2020, second, third, or fourth quarter. So those are the two big restrictions that there are with PPP2. And again, that's on a consolidated basis. So if you own 3 companies and 3 companies did, 2 of the 3 did really, really well, as you add those up and aggregate it, you need to pass, both of those tests, that you got to be less than 300 and you had to have a 25% decrease in any one quarter. Again, I think for a lot of folks that was in Michigan particularly, it was the second quarter, right? That April through June where, the stay-at-home order really went into effect, mid-March. And for a lot of businesses, they didn't come back up until May, till June. So there's a good portion of that second quarter that there was significant revenue reductions because of the shutdown. So that's generally the easiest quarter to qualify for most, is that second quarter. And again, it doesn't matter what happened the third or fourth quarter. It's just a 1 quarter requirement. So if that second quarter you were down 28%, and then you were even the rest of the year, you still qualify because of that second quarter. There's the same expansion for a lot of the hospitality businesses that start their NICS code with 7.2. That's a lot of the franchises and things like that. The one important expansion there, especially with the restaurants, the calculation on the first PPP loan was 2.5 months times your average payroll. They've expanded that to 3.5 months, for this NICS code 72 group. So now you're getting an extra month's worth of payroll or calculation for your loan. So that is going to help a lot of those, restaurants in particular, that were hit extremely hard during that. And really, for your area in particular, double whammy, right? Because of the travel restrictions, there's so many, restaurants and hospitality venues, in northern Michigan that really rely on that tourism to get, a significant amount of their revenue. So that was, this is going to be some additional dollars on the PPP2 that should help some of those businesses. And the other thing on PPP2 is that there's a flexible coverage, so you can be anywhere in between 8 and 24 weeks. You can pick the number of weeks and include, those wages. And we'll talk a little bit later about the employee retention credit, but that's important when we start looking at using both programs together. They also expanded some forgiveness costs, certain operator expenses related to software, property damage from public disturbances. Probably the big one is probably the supplier cost. Your key high dollar supplier costs that you've got purchase orders out there for, and you're using, those that's probably the most substantial one of that expanded list, just because that's where the biggest dollars are for cost of goods sold or purchase product for what you're selling. The other clarification, one of the clarifications they also gave was related to the EIDL grant. Those grants on PPP1 were originally offset from forgiveness. Now they've eliminated that. So if you were one of those early forgiveness filers and you got your full forgiveness, if you haven't already seen it, your bank should be working with the SBA to get that $10,000 back from the SBA so they can apply it to your loan, and you should have complete forgiveness. Or if you paid off that $10,000 just because you didn't want to deal with it, you should be seeking a $10,000 repayment from the bank after they sort it out with the SBA. And the other, another area they tried to simplify some things was forgiveness. The forgiveness application they expanded, to cover more people up to the $150,000 loan range to have the more simplified forgiveness application, that allow people to, what's important to understand about the simplified forgiveness application is, while it may be less paperwork, you're signing on that document that you use the money properly, 60-40 split, payroll to non-payroll. You applied the right non-payroll expenses. And so when you sign this form, you really need to still keep all those records and all that documentation, because while the small loans won't get reviewed anywhere near the frequency that the large loans will, there's always still that potential. I believe the record retention on some of the documents ranges from 3 to 7 years. So you really need to make sure that, and the time is now while you're kind of doing this, is to get all your documentation together, and just have it somewhere where you can easily reference it if it does ever get reviewed. Because you just can't say, well, hey, I was under 150, I didn't need to really save all that. Well, that's not really what the forgiveness simplified application does. It just makes it faster to get forgiveness, but it doesn't change your record keeping or the expectation that you can support your application. So another recent change is they did expand PPP2 to be able to use in bankruptcy as an administrative claim, which was a big change. So that is now going to be a more viable option with companies in that, if they're in that position. And I think the reoccurring theme with a lot of these changes is that there really has been limited additional guidance. Even their frequently asked question page, they really haven't added a lot to that since they rolled out the PPP2, and it really just seems like the focus just on getting the loans out and processing, and I almost get the sense that the SBA they just don't have the bandwidth to really get into a lot of these questions that are floating out there, and they're just going to focus on it after they get through kind of this busy loan and forgiveness application, and then try to clean some of this up after the fact, which is less than ideal, but that just appears the path that they're heading down, because we're just not getting a lot of guidance coming out on a very consistent basis to clear things up for questions. So those are kind of the highlights of some of the changes that came out at the end of the year, and then some more recent changes that have come out here within the last couple weeks are when the Biden administration came in, they came in and wanted to do some things and some enhancements, and so they did focus on small businesses with the PPP program, and they made a pretty significant change. If you're a sole proprietor or an independent contractor, you had to use your Schedule C net income, and you could use up to $100,000 of income that you could use your 2.5 months to get your $20,833 of a PPP loan. Well, if you didn't make at least $100,000 in net income, you weren't going to get that full amount. And there's a lot of businesses out there that that are maybe starting up or didn't maybe have a great year in 19. So now they changed that to gross income. So now, as long as you had $100,000 in gross income, you'll be able to get that full PPP amount for a sole proprietor or an independent contractor. So that was really a big change. So if you're in that boat or people in that situation, then you really should encourage them, hey, refill out your PPP loan application, because that change in the calculation is going to allow a whole nother batch of people that didn't have the net income to support the first set of guidance that they can now qualify. And there was also a change to the, if you had a student loan and you were delinquent, that you weren't eligible. Well, now they've taken that off the table so now you can. So that is an area too, especially with a lot of young business owners that are struggling, trying to start a business and pay student loans, and we're faced with tough choices during this process. So that was a recent change. And I think the other thing is, one of the big areas with the end of the year announcement was the announcement that the employee retention credit could now be used in conjunction with PPP loan forgiveness, where prior to December that wasn't an option. And so we've been waiting for some clarification on how these two programs will work together, because for the employee retention credit, you're going to need to file amended 941s, for prior years if you qualify. And then also, you can't use the same dollars for both programs. So, for example, if you got 100,000 in wages, you can use it for one or the other, but you can't use that same 100,000. So when you look at your 19 payroll, there is some flexibility to split your payroll to maximize both programs. So one of the announcements, one of the big questions was, what do I do if I've already filed for my forgiveness? And I was already granted, can I use any of those dollars? Because if I use 24 weeks, I maybe didn't need all those dollars for forgiveness. So the SBA came out and clarified that, yes, if you already got full forgiveness, any dollars that you didn't need for PPP forgiveness, you can use for ERC. So it was kind of an excess or unused dollars beyond your PPP loan amount could be used for ERC if it was on your PPP forgiveness. The only downside was that if you just filed just payroll and none of the other things like rent, utilities, you can't modify that original PPP-1 application for forgiveness. You need to use it as is. So if you didn't use that 40% non-payroll, you don't have an option after the fact to go back to it to try to stretch your dollars further for both programs. So there's more forms. They re-released application forms, forgiveness forms. So make sure you go to the SBA website to be sure you're dealing with the right form and you're getting the right documentation. The other form we're seeing a lot recently is the necessity form. So if you had a loan over $2 million, there's a multi-page necessity form that's going to ask you questions about your drop in revenue, your cash positions, how you were impacted by COVID as part of your loan. So it's not clear. There's no right or wrong answers on the application, and they haven't really. This is one of those areas where the SBA hasn't really even defined what are they going to use the information for. I mean, they're trying to measure when you check that box that you needed the loan, that you really did need the loan. But it's pretty gray on exactly. We've helped a lot of clients fill the form out, but we have not got any feedback from the SBA or a bank yet on what that information meant or what it was used for. So that's just something we're keeping a close eye on. The economic injury disaster loan program was kind of refunded again at the end of the year with an additional $20 billion. Again, this was the program where you could get a $10,000 grant and then a loan up to $150,000. That's where the program stood most of last year. The grant money ran out, and so now they've replaced that, but it's very limited. You'll have to go to the SBA website, but it's low-income areas. It's a very targeted group of companies that can get the $10,000 grant on it going forward. So if you haven't applied for an EIDL loan or grant, you may relook at it and see if you're in one of those areas with the type of business that would qualify for the $10,000 grant. And then again, we haven't really seen if they're going to move off the $150,000 loan amount or with the additional funding or not. We haven't seen any clear evidence that they're doing anything different. But again, this is a loan program, not like PPP where there's forgiveness to it. It's a long-term. I mean, the benefit is I think it's a. Gosh, now I'm drawing a blank. I think it's a 30-year amortization, 20 to 30-year amortization on this at low interest. So again, if you just feel like you need a working capital boost, this could be a good program to get some working capital in and then pay it back over a long time at a reasonable interest rate. So again, this is a very simple online application. I mean, it literally takes 5 to 10 minutes to fill out, and then you get in the queue. And it could take a couple weeks before the SBA circles back, but it's run directly through the SBA on their website. Shuttered venue operator grants. Again, this was a new program. $15 billion allocated at the end of the year. Again, directly with the SBA, not through your banks. But this is an either or with the PPP program. So this is an either or with PPP too. So you need to do an evaluation on what the shuttered venue amount can be versus PPP, and if there's any what's the best program for you. But it is a program kind of focused towards kind of the museum, the entertainment venues, concert arenas, those type of programs. And the last program that I'll just mention is Main Street Lending, and they did reduce the amount. This was originally kind of geared towards larger companies, but they did reduce the minimum loan amount on this program. So this might be something, again, we haven't seen a lot of adoption of this with banks or a lot of people, going after it because there are some strings attached to it with the SBA. And some of those strings can be, things like, inhibiting maybe your ability to get future loans without their sign off. Some there's a lot more restrictions with the Main Street Lending program. So, I mean, take a look if it's something that, you're not finding any financing somewhere else, but just kind of go in eyes open that there's a fair number of restrictions with that program. We'll take a quick jump over to some of the tax areas that they clarified here recently. And I think the largest was just on the PPP loan is that, that it is not taxable. So this was something that when it first came out last year, it was going to be added back to tax, the forgiveness component of it, which really would have meant it would have been whatever your net tax rate is what the true forgiveness was. But, Congress was like pushing to get this done, and they finally have got it done. So PPP 1 and PPP 2 loan forgiveness will not, cause an issue with income tax. All the expenses will be deductible, and the forgiveness will not be taxable. It also addressed some of the basis concerns that the forgiveness will increase basis, so it won't be ignored there, which was good clarification. And the EIDL grants fall in the same category, that there is no tax impact from the EIDL grant, the 10,000 component that flowed through as other income for most businesses. And then the employee retention credit. I did mention that this program is now can work in conjunction with the PPP program. And this could be a potentially big savings for companies because 2020, if you were down more than 50% in any quarter, or if you were shut down on a government order, that particular shutdown range, you might be eligible for this tax credit. But it's basically a payroll tax credit. So in the qualified period, where either you were down 50% for that quarter, or in a time frame where you were shut down because of a government order, up to $10,000 of those wages can be calculated per employee for that coverage for that qualified period, and then you get a 50% tax credit. So it is capped at $10,000, but let's just say that you were shut down for 2 months and you still paid some employees, even if you paid them $4,000 over a month or 2 months, you could get 50% of that as a tax credit back against your amended 941. So the only the qualifier is that you've got to use you can't use the payroll dollars for both the PPP forgiveness calculation and the ERC. So you need to stagger those. So that may mean using some of the wages for the ERC maybe early in the year, and then use the end of your coverage period to get enough PPP dollars. So it's a fairly complicated kind of calculation and process to walk through. I know Raymond has a complete team assembled just for ERC to walk through that calculation and be sure that those dollars can be split appropriately between the two programs and that we can maximize it. If you haven't filed your forgiveness application for PPP1 and you are eligible for the ERC, then that's definitely something that you need to do some planning with to make sure you can maximize the return, for both programs. So that was a big deal with that announcement at the end of the year, and we just recently got some guidance from the IRS on how to work these two programs together efficiently. And then they did roll this program not only through 2020 but also into the first 2 quarters of 2021, and it's even a better benefit in 2021. First thing that is, they reduced the threshold for qualifying from a 50% revenue reduction to 20. So if your first quarter in 2021 is 20% less than 2020, which is a good chance it could be, because remember, 2020, we weren't quite into full COVID until the end of March. So most of that first quarter should have been pretty normal. So there's a good chance that if your business is still down because of COVID, you're going to meet that 20% revenue test for that first quarter. And then for the first quarter, you can get up to a $7,000 credit on $14,000 in wages. So there is, the same credit, $7,000, is available for the first and second quarter of 2021. So again, that's one that, again, you should be looking at your, particularly right now, looking at your revenue this quarter versus last quarter and say, how close am I? And is there a way I can get to that 20% reduction? Because again, now you need to have a pretty decent, someone's got to be making, at $14,000 a quarter, you're talking almost $60,000 a year in wage, but, for every $60,000, person, salary or hourly person you've got, I mean, at $7,000 a person, for the first quarter, I mean, that could be pretty significant, on 10 people, that's $70,000. I mean, that's a potential big windfall that you can get right on the 941 and get that into your pocket very, very quickly. So those are a couple things on the ERC that came out that really just opened up some doors maybe to some folks that will allow them to get some additional cash, into their business. So that's kind of it. I think the intent was to sort of run through this, and I don't know, I think the target was 30 to 40 minutes. Looks like I'm pretty close in that range. I don't get through a lot of information relatively quickly, so we're going to leave 15 or 20 minutes here at the end, really just to dive into any specific questions, or if you would like me to review something again, I'm more than happy to do that. So I think at that point we'll open up. So Brenda, I don't know if you just want people just to unmute and ask a question, or how you want to go about handling any questions.
Yeah, however they are most comfortable. I'd be happy to read from the chat, or you're welcome to take yourself off mute. Thank you so much for taking the time to share all of this important information, Tom.
No problem.
Yeah, does anyone have any questions specifically regarding these items? And I'm sure that, we could probably venture outside of what you've discussed here, Tom. I'm
Sure.
Yes.
Hi, Tom. Kevin Manor here. I've got a quick question for
Kevin.
you. Hi. So originally the first round of PPP was, I think it was set at 75% or 75-25 split, payroll versus other expenses, and you're quoting 60-40. And I just want to clarify that the threshold at 60% is a minimum, right? Like, so if you spent 70% on payroll during that time period, you're still, that's the goal, right? Like, you can't be under 60% and have
Correct.
that favorable.
Yep. Yeah, you can be 100% payroll. You just can't be below 60. So you're right. It's a minimal calculation on the payroll side.
Is that time period, it was originally, I forget the number of weeks, and then that was expanded to like 20 weeks. Does either time period still work for that?
Yeah, they expanded to 24 weeks. So yeah, in PPP 1, you've got 8 or 24, or 8, anywhere in between 8 and 24, but it's the same 60-40 split between payroll. And again, that payroll defined, which payroll includes your health insurance, your 401k match, your state unemployment employer portion. So that's what's all lumped into that 60% payroll cost number.
Okay, so in my case, for example, and I've got a number of clients this way too, I think it's pretty easy to hit the 60 or 75% or even higher for that 24 weeks in payroll. And so is that the smarter or the easier thing to do? I was thinking about record keeping, just maintaining.
Yeah, it really depends on whether they're eligible for the whether they're eligible for the ERC tax credit, because let's say you've got a client that's eligible for both. If they're eligible for both, you're going to want to maximize the non-payroll component, which will be more record keeping, but it'll free up more dollars to shift over to the ERC tax credit. If you don't have the ERC, yeah, you could just do 100% payroll and don't worry about submitting any other documentation.
Well, and if you're under the 150,000, you don't even have to submit documents, right? You just have to retain documents to prove the numbers you key in.
Correct.
Okay, so if a person just keys in 60-40 as a split, then if it ever were questioned and you had other expenses, you could because I don't know if everybody that I'm thinking about qualifies for that ERC. It'd be pretty easy to substantiate more payroll dollars, I guess, if you had to, right? For the
yeah. I would say most of the clients I'm working with, if they don't have ERC, they're going to payroll first, just because they can have one payroll report, covers everything they need for forgiveness, and they don't even need to worry about any of the other categories.
Okay, perfect. Thank you.
Thank you, Kevin. I'm actually going to put a link to Raymond's business resources page. There's all kinds of information in this space that you might find helpful as well. After, you might, if you think of any questions afterwards, are you okay with us giving everyone your email address, Tom, as well?
Yeah, that's fine.
In case they have any additional questions after the call. Anyone have any?
I think.
Go ahead, Bob.
I was just going to say, I think, everyone's just, now's the planning time of the year, where everyone, I think, has a pretty good understanding of how these programs are working and what's available. Now is really that time where, you talk about financial wellness, as a heading, now's really that kind of longer term cash planning time where, all right, I got my PP2 loan if I qualified, how does the next 90 to 180 days shape up for my revenue trends, and how do I really start to look at making sure that I'm maximizing my PPP cash, because again, with the 24 weeks of forgiveness, you really can spread your employee cost out over a longer time period. There was a lot of pressure on businesses off PPP1 that said, oh, you need to bring everybody in, you need to pay them the full wage because that's what PPP is for, which it is. And in an 8-week forgiveness period, that's how it would have had to happen. But in a 24-week environment, now you've got some planning options where you might say, I only have enough business to support 3/4 of my staff. And so that's all I'm going to carry, because even with that, I can get full forgiveness over 24 weeks instead of, trying to bring everyone back and then be in a situation once the PPP2 cash is gone, it's gone. So instead of maybe getting, 24 weeks of, coverage, they only end up with 12 or 14 because they were paying people and they weren't there and they weren't working. So there's some business decisions that I think you have to consider on how you're going to utilize the PPP funds in conjunction with maximizing cash for your business and having more of a long game in mind as you're doing your planning.
Thank you, Tom. Quiet bunch today. Well, if you do not have any additional questions for Tom, we will go ahead and end this session and post this later on. I will send the link out to all of you so that you have the recording and you're welcome to share it, but it will be available publicly later on today. Thank you so much for being here today.
All right. Thanks, Brenda.
Thank you. Bye, Tom.
Bye.